Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for February 1st, 2017. I'm Frank Ochoa, aka PivotBoss. Quick announcement, I will be hosting a monthly market outlook webinar later on after the close at 3:30 p.m. Central Time. You can use the Join Me link of PivotBoss and we'll connect and do a market outlook for various futures contracts, in addition to doing some prospecting for stocks for the month of February. So please join me. Everyone's invited. Here's a look at the daily time frame of the ES right now. You'll notice the previous session, we talked about how price was likely to continue downward and look for that low. It did. We knew that heading into today's FOMC statement and Fed funds interest rate decision, we were likely going to stay inside the range overall from the previous session, and we pretty much did that. One thing that I mentioned before is we have a 2287 half key level up here. That's a very important level. Should price reach 87s, I would expect bears to come in and defend short term. But overall, we know that the market has been trending higher. Pullbacks likely to be defended, and that remains the case for now. Obviously, if price can continue to hold outside 2280, that's what we mentioned before. Acceptance beyond 2280 will open up the door to retesting the high and pushing through perhaps the 2300 level. Overall, that 2257 key level remains intact, and that's an important pivot in the chart. Failure to hold that level would rotate prices much lower. Right now, every time price rotates below it, it's been a buying opportunity for bulls. Let's take a look at the intraday time frame here for a moment. Looking at the intraday time frame, you see the previous session we had a nice push off of the previous session's low. We had lows and it was barely breached by a point or so, and then pushed back up and held and rallied back within the range. That's what we were looking for yesterday, especially in the trading room. We got a nice continuation to that end, and now we're holding above the 77s. That 76 half is very important short term, and we have a little range that's forming above here. I would say that any pullback could offer a short-term buying opportunity, perhaps for a move into 87s. Any push into 87s could offer a selling opportunity back down, given that it is a short-term LVN. Now, right now, given the fact that we do have FOMC statement later on, we could see a fade the edges type of morning throughout most of the morning after the initial range is set. So fading new highs, fading new lows could be the approach until that key statement is released and the interest rate decision. Now, right at 1 p.m., the open price of the 1 p.m. Central time zone is going to be very important. That's going to be a key level, a Fed-based key level that we will carry over into the days and weeks ahead. All right, let's take a look now at crude oil. Here's crude. Taking a look at the higher time frame of crude right now. Again, we remain within a very tightly coiled pattern. I mentioned before, this is not very good for higher time frame trading. It's basically just stuck in the mud at the moment, trading around value, which is about 53s. And basically, we're going to continue to see that until we get some action outside of this range. Right now, 54 has been a great level to fade. 52's a level to fade. But really, we could even get out lower than that and still see a fading environment. So right now, we're basically chopping within value at the moment. Any test at the extremes of this range will likely be faded back toward value. So right now, at least on a higher time frame perspective, not a whole lot to do in terms of directional conviction, and it's more of an intraday trading game at the moment. So dropping down into the intraday chart, you'll see right here what we were looking for in the previous session was how was price going to respond once it got into the 53.60s. This was a level that I mentioned would be a first test fade back down. It got within 4 ticks of that range, failed to hold above 53.40s, which was the upper band of a key level, and that led to a late day sell-off. So that was a nice move down. Now we're starting to work our way back up a little bit and retesting 53.20, which is the previous week's close. That's going to be a level to watch here. But again, this range, rather wide. You can see up here 53.60 still has a very important LVN. I would say that would still offer a fading opportunity at the moment, and as well as 54s above that. So 53.60 and 54s are both areas where bears want to defend. And much lower here, any test of the current overnight low into this lower portion here could be an opportunity to defend and push this thing back toward 5-day VPOC. Right now, price is currently trading around 5-day VPOC at 53.15. All right, let's take a look here at gold futures. Gold, if we look at the higher time frame, is approaching our upper target of 1220. This was something we talked about before. The fact that 1180 held implied a retest back toward 1220. At the moment, the expectation is that we likely stay within this range from 1180 to 1220. So any push beyond 1220, perhaps 1221, 1222, could be an opportunity to look for a trap and return price back toward 1200 and perhaps even back into 1180. So right now, expecting perhaps a test into this upper zone here and then for a likely fade back into the range to be seen. On a short-term basis, here's the intraday on a short-term basis. You'll see that the trend has been to the upside. Very nice uptrending market so far. We have a nice LVN forming at about 1208, and right now fading the edges could be the way to go short-term. So back down here into 1208 could offer an opportunity to push to the highs here and into 1220. Any push beyond that zone could be an opportunity to fade back down. Failure to hold 1280 could open up a return to 1200, which again is that mid-pivot between those two extremes, 1180 and 1220. All right, let's take a look here at ZB. ZB and others have been requested by some of you out there in Twitter and also in the trading room, so we're going to be switching it up a little bit. Thanks for everyone providing feedback. Here's some of the levels that we watch here in the trading room for ZB. We've had some very, very nice moves off of our key ranges, our key levels, and this has been a fantastic product off of our PivotBoss methodology. Right now, what you see is when we had this smaller range here with the ascending wedge, we were looking for a push higher. The first defense was going to be retested for a push into 153.21. We got that move. After rejections here and a failure to hold 151.11, the expectation was for a retest back at 149.12 and for bulls to defend that area for a return back up. And so far that's playing out. We had a rejection day, a retest entry, and a continuation. At the moment, any retest of 149.12 is still likely to be defended for perhaps a push higher. Above 151.11 can offer a retest back toward 153.21. So right now, this offers an opportunity to defend 149.12 for a shot at continuing through 151 and perhaps back into highs at 153.21. So that's the swing idea at the moment, but 149.12 needs to hold. On an intraday basis here, what you'll notice is there's been a little bit of a trap up high at around this level right here. So 150.24 is everyone that got long above that zone is currently underwater. And so right now I would say that short term 150.24 could offer a short-term selling opportunity back toward 149.24. Any return back into 149.24 and into that 12 could offer an opportunity to bring it back up into the range. So right now fading 150.24 or thereabouts could offer a move down across the range, and any push against this CVPOC could offer an opportunity to bring it back up. All right, that's it for now. Let's see how this plays out heading into the rest of the session. Good luck and trade well.